Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at Meta Platforms. This is my 8th or ninth largest holding, and it's up about 14% after hours on the back of really strong earnings. We'll take a look at those in a second, and I'll kind of dive into the valuation metrics and see if it still makes sense to own this stock after these earnings, after it's up about 15%. If the stock opens up 15% tomorrow morning, it will certainly bode well for my portfolio, and this will push it up the ranking of my top 10 holdings as well, even without any additional purchases. So really interesting history for this company. In the last year or two, the stock has been up and down quite a bit, really benefited from the pandemic, but then the stock market started to think they're spending too much money on their Reality Labs division. The ads business is suffering because of some changes that some of the carriers made, Apple made, etc. And they've really done a good job of righting that ship. They've reduced overhead. They're still spending a decent amount of money on Reality Labs, but they really see that as the future. And I do think there's some cool technology that they're investing in there, even if it's not really showing off any results right now. And their advertising business is really humming along nicely again after struggling a little bit here and there. And again, Meta Platforms is a business that touches half of the world's population on an almost daily basis. So you're talking about WhatsApp, Instagram, Facebook, Reality Labs, whatever, even Threads. I don't know if anybody uses Threads, but it's out there as well. People use Facebook. You may not think they do, but they do. People use Instagram. People especially use WhatsApp in other countries outside of the United States. And there's a lot of money to be made there. And they haven't even monetized WhatsApp in any big way. So there's a lot of opportunity ahead of them as well when and if they do that. So that's why I own the stock. And one of the reasons I bought the stock in the latter part of 2022 is because anytime a company like this, a solid company like this, is trading at around a 10% free cash flow yield, I'm kind of a buyer. If I can find a really good company at a 10% free cash flow yield, I'll just buy and hope that it kind of works out at the end of the day. And it's sort of worked out here because my purchases probably on average were in that high $100 range as I was buying on the way down and then also on the way up. And now the stock is trading at $450. So no complaints about that. So let's look at the earnings. First, revenue, $40.1 billion for the quarter, up 25%, $134 billion for the year, up about 16%. Expectations for Q4 were $39 billion, so beating by $1 billion is no small feat. On the EPS side, the bottom line results of 533, a huge jump from the year prior, again, when they were struggling with overhead and some advertising issues. Really righted the ship really quickly, which is awesome to see. Really good job by management. 533 for this quarter. The expectations were 491, so a pretty big beat there as well. Again, beat by about $1 billion on the ad revenue side. Even Reality Labs, which was expected to make about $812 million in revenue, made $1 billion in revenue. Now, on the other hand, Reality Labs is a loss producer at the moment. The estimated loss was $4.1 billion. They actually lost $4.6 billion during the quarter, so still burning money hand over fist there on the Reality Labs division, but everything else is offsetting it, so it doesn't really matter. Not really. At the end of the day, you can kind of look at that as if it works out, it's fantastic. If it doesn't, yeah, they burned some money kind of investing in that business, but if they can cut back on those costs, that's basically another $4 billion in free cash flow, $4 billion in operating income that they can get in the future just by not investing as much in that opportunity. Although I think there's something to be said for what they're doing and probably will eventually work out. And the reason I say this is a good business, you may not think it is, but 2.11 billion people are daily active users of Facebook. 3.1 billion people are daily active users of their family of apps. So that includes Instagram, WhatsApp, what have you. Tons of ad impressions. Their ad business is clicking on all cylinders. Really nothing you can say that's bad about this business. They've righted the ship. Operating margins for the quarter from 20% to 41%, for the year from 25 to 35%. Net income up about $17 billion. Really amazing results. Nothing looks bad here. So what else are we looking at here? Share repurchases are another big thing. This is a company that's been buying back shares, and it's going to continue to buy back shares. They just authorized another $50 billion increase in their share repurchase authorization. That's a good thing for investors. That's in addition to the 30.9 billion they already have available and authorized. So they're going to, in the next 12 to 24 months to whenever, however long this period lasts, they have $80.9 billion worth of share buybacks available. That's at today's prices before the 15% bump, 8 to 9% of the company. That's pretty good. Their balance sheet is super stellar. They have $65 billion of cash and marketable securities on the books against $18.3 billion in long-term debt. And on top of that, this year they produced $43 billion in free cash flow. Really awesome. I mean, when you talk about $1 trillion company producing $43 billion in free cash flow, growing that at a very good clip, improving margins, nothing bad to be said about that. And the reason they're doing that, the reason they've been able to really right the ship so quickly is that basically they reduced their headcount by 22% and are growing as a business. That's the type of efficiency that the stock market is going to appreciate. Again, not great for the people that lost their jobs, but at the end of the day, this company and a lot of these tech companies kind of overhired during the pandemic, expecting for those good times to never end. And now that things were slowing down, they had to reduce their headcounts a little bit to be in line with reality. And on top of doing all of this, and this is an interesting thing, they're actually initiating a dividend for the first time in their history. And as you get more mature as a company, something you start thinking about, this is not going to be a huge part of their actual cash outlay. We'll look at what 50 cents per share per quarter means, but they are starting a dividend of 50 cents per share, assuming that's going to be quarterly, and they intend to pay that quarterly on a go-forward basis, subject to market conditions and approval, et cetera, et cetera, et cetera. And again, they talk about their restructuring, the various layoffs they had, all of the costs associated with that. So those costs are kind of embedded within the expenses for 2023. That only means good things for 2024 in terms of improving margins as well. And on top of that, another thing that I forgot to mention that I think they mentioned somewhere over here, or maybe they didn't, but I read it somewhere. I won't. There you go. So they're expecting total revenue for Q1 2024 to be 34.5 to 37 billion. The market expected that to be closer to like 33.7 billion. So even on the lower end, they're beating that. So on the lower end, that's 7.5% growth from Q1 2023. On the top end, that's 15 to 16% growth from Q1 2023. Talking about similar expenses. So again, improving on the top line, not changing it on the expense line. That means good things for the bottom line. They are going to see some increased costs in terms of maybe higher infrastructure related expenses. They are probably investing in AI, and just like all of these other companies, all these other tech companies are. So certainly not a surprise there. And finally, they talk about Reality Labs over here as well, and they're looking at that as a meaningful change year over year in terms of their operating losses and those increasing. So again, this is a continuation of the story they've been telling for the last couple of years. They're essentially saying, yes, we're losing a lot of money in Reality Labs. We know that the market doesn't love it at the moment. They've punished us for that in the past, but we're not changing stride. We're continuing to spend a boatload of money. We're talking about in the neighborhood of tens of billions of dollars of losses from the Reality Labs division across the entire year. And they're going to continue to do that. And again, like I said, they are expecting capital expenditures to kind of be an increase over the last year, investments in servers, both AI and non-AI hardware, and data centers and things of that nature as they are working up their own data center architecture and infrastructure. So a lot of investments are going to be there, but the good thing is it's going to be supported by higher revenue, or at least higher revenue to start, and likely improving margins due to the fact that their total expenses aren't changing. So despite the fact that they're actually spending more money on things that they deem crucial to the business, which are the capital expenditures, they're probably spending a bit less money on payroll to offset that and actually make the margin work out pretty well. So pretty impressive results here. I can't find a thing to be upset about. It seems like the market can't really find a thing to be upset about anytime a stock is up 15%, with that stock being a $1 trillion company already. That's a good thing. That's a surprise, and it's not anything to complain about. So as I look at this stock, let's look at the valuation here. And again, this video is purely for informational, educational, entertainment purposes only. It is not investment advice. Do your own due diligence before making any investment decisions. So as I look at the valuations here, they had a pretty tough 2022, and you can kind of see why the stock was punished the way it was punished. Lack of growth in 2022, margin compression in a big way in 2022. But now as we move into 2023 and the recovery is swift and the recovery is good, and the stock price is starting to reflect that. On top of that, they're adding their dividend that starts in 2024. Again, it's only $5 billion of their free cash flows going out as a dividend, not a huge deal. If you feel like it's a weird sign that a growth company is doing this, whatever. It's kind of like how Apple did it a couple of years ago. It's just something to give money back to investors, those who are holding for the long term and might not necessarily want to sell. And it's a small piece of the puzzle here. It's only a 0.5% dividend yield before the price bump that is going to happen when the market opens tomorrow. So the yield is going to be less than 0.5%. And then I'm assuming it's going to grow at something slow, like maybe a 10% growth rate, maybe higher, maybe lower, but that's kind of what I'm pegging at for the moment. As I look at revenue growth, as I look at 2023, now that's a completed year. We've kind of got our actuals for 2023. As I look into 2024, 25, 26, 27, I think what's going to happen with this company is growth is going to slow. That's just what's going to happen. I don't expect growth to improve materially going forward. But even if it slows a little bit, it's not a huge deal in my mind, as long as it doesn't really take a nosedive like it did in 2022. I think they've got things figured out. They've got the ad algorithms working pretty well, and they are on top of that, improving their margins by making the most out of their headcounts, even as they make investments in their infrastructure, in the AI that's coming out there that's going to make this an even more efficient business in the future. As you go into the future, as you look 3 to 4 years out, can they materially impact their revenue with WhatsApp, monetizing that business? Can Threads become anything? Probably not. Can Reality Labs become anything? Maybe. Hard to see that in the future, but as I look at the next couple of years, my assumption here is that growth is going to slow a little bit. You can play with these assumptions. I'll share this spreadsheet down below. Just hit File, make a copy, and then margins are going to improve a little bit. And I'm kind of ending up at a 33.5% free cash flow margins by 2027. I think that could go substantially higher. This is a company that's had margins as high as low 40s in the past, before they started spending a ton of money into Reality Labs. If you think about Reality Labs, that's probably like a $10 to $15 billion free cash flow hit any given year. So if you kind of think about what that means, that's 5% margins right from that little investment that they're making, that tiny little investment that the market seems to hate. Now, if you watch a lot of the videos about what Reality Labs is actually doing, it's not just a headset, but they're doing a lot of cool stuff that may eventually materialize into something. It's just not there yet. As I look at this company, though, as I look at the valuation, right now the stock market is kind of giving this a 4.2% free cash flow yield based on the price that it closed at today. If I look at what it is, if it goes up about 15%, you're talking about a free cash flow yield that's closer to 3.7%. So in my mind, that's kind of a fair price for a stock like this, a stock that's growing at a pretty good clip, that's got a lot of potential upside with the investments that they're making, with WhatsApp, with Reality Labs, even with the growth potential of their family of apps in terms of monetization, in terms of improvements on margins due to AI and AI investments, in terms of bringing a lot of that stuff internally, and kind of developing their own AI models and monetizing that in some way, kind of like how OpenAI is being monetized, how Google is thinking of monetizing Bard, and I'm sure Facebook can really easily monetize their own AI chatbots within their own family of apps that are being used by 3 billion people every single freaking day. So it's not too crazy that these growth assumptions are conservative. nor is it too crazy that these free cash flow margin assumptions are conservative. But as I look at it today, I'm kind of putting this free cash flow yield valuation mostly in that 4% yield range, maybe 25% of that going into the 5% yield range. Either way you look at it, with the buyback, with the dividend, and again, I didn't mention buybacks, but I'm kind of assuming 35% of their free cash flow going towards buybacks. That's maybe even conservative, because if you think about what they have allotted right now, it's $89 billion. 35% of their assumed free cash flow is only $98 billion within the next 4 to 5 years. So potentially some upside to be had from this number, which would improve this buyback yield here. At $3.94, which is where it traded before the earnings announcement, this was a 12% return, which again made sense to me from a pricing perspective. And again, these revenue assumptions here and these margins assumptions, I've kind of bumped them up a little bit off of what the market had because of how good the earnings were this quarter. So I think this, once you look at these assumptions a week from now, when some of these analysts do their estimates again, they're going to go up from this quarter. So I'm already adjusting for that. So from a 394 price point, it's about a 12% return. If I'm looking at a 10% target return, which again would be about 10.5% with that dividend, you get a fair value of about 425, which is realistic to me, makes sense to me. I don't think it's too crazy. I don't think it's too conservative. I think it's right on the cusp of reality. If I look at what the stock is trading after hours, it's at 451 right now. So if I plop in 451, again, that's a bit above where my fair value is. I get about an expected return of about 9% with these assumptions in mind, which again, isn't too bad. Again, I think Meta is a really good company. This is not a company I plan to sell anytime soon. Am I going to buy more of these shares after today's report? Probably not, because I already hold a substantial position. But if there is any weakness coming up from market weakness or what have you in the next couple of months, couple of weeks, whatever, if the stock kind of starts dropping into that low 400s range again, even the high 390s that we've seen as early as this morning, this is potentially a stock I would build a bigger position in. But at 450, it just seems fairly priced to me. And because I already have a pretty good position in there, I probably won't buy more shares at the moment. So let me know what you guys think about Meta. Do you think I am missing anything here? Again, like I said, I don't think this is too conservative, nor is it too aggressive. I just think it's kind of trying to find the sweet spot. There's certainly some upside here, some obvious potential downside if there's some economic troubles ahead, a recession, advertising will suffer, and a company like Meta will suffer. But the nice thing about Meta is because they are such a free cash flow producer, even if their revenue shrinks a little bit, I don't think they're going to be in any trouble of coming into financial distress or anything like that, because they have such a good balance sheet, such a healthy balance sheet. Their products are used all over the place, all over the world, and they've done a really good job of fixing the problems that ailed them just a year and a half ago. And that's one good sign. When you have a management team that can look at the problems that are out there that are impacting your share price and kind of flip the switch and recover within a year and a half, you can't complain about that. So I, as a shareholder, am not. But let me know what you think. Do you like the earnings report? I'm assuming if you're a shareholder, you do like it because the share price is going to make you happy. But let me know if I missed anything, if you disagree with anything, if you agree with anything I said. As always, if you want me to review any other specific stocks or have anything that I should talk about, let me know down below. Let me know what you thought about the video. If you are new here, subscribe to the channel, like the video if you liked it. And thanks for watching. Bye.